Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
You're with us here on a fresh new edition of Trading Hour. The headline, of course, the headline story, the big story is the rupee. And I think the stock market and what's happening there has been relegated to second position. The rupee hitting 70, the market still with about a 50-odd point gain on the Nifty. And it all looks pretty steady at this point in time. There are some flashes which are coming up as we speak at the bottom of the screen. The RBI is likely to have come into the market, intervened. And that was likely at some point. It's happened now. Today. I mean, yesterday the rupee went one way. There was that big 1.5% move against the dollar. But the RBI was absent, out of the market. It's in the market now, and the rupee is pulled back just a little bit. 69.97 or so is where we trade at this point in time. Ekta, morning. And as I think Lata was pointing out absolutely correctly, that there is no panic. Absolutely. I mean, this talk has been there that 70 aayega, 72 aayega for a while now. So nobody's really surprised. There's no, I mean, nothing at all. I don't sense anything.
Absolutely. I mean, I think 70 is just a number. There was this gradual depreciation which was expected for the rupee, and it's really par for course. If you compare us year to date in terms of what the other emerging market currencies have done, we've been actually quite resilient. So, for example, the Indian rupee as compared to, say, the Indonesian rupiah, yeah, okay, fine. The Indonesian rupiah has depreciated around 7.8%, but as compared to the Russian ruble, it's down 17%. The South African rand has depreciated around 16-odd%. Turkish lira, we all know what's happened to that. Over 80% depreciation on a year-to-date basis. And the Brazilian real, which has fallen around 17% year-to-date. So compare us to that, we're definitely better off. And if you compare us over, say, a 5-year perspective, say from 2013, the rupee has been extremely resilient. So 70 would definitely be par for course. But let's get talking in terms of the technicals.
You know, on that table, I just want to say that some people are going to stand up and say, what? You really want to compare us to Turkey? Brazil, South Africa? I mean, you know, but that's the kind of depreciation that those countries have seen. And but country-specific issues per se. Just one more point. You know, I don't think anybody is, but I'm just making the point nevertheless. Nobody's making the comparison to 2013, which is the taper tantrum. Yeah. Back then, we had inflation at 10% and growth at 5%. You were seriously looking at a stagflation kind of a scenario. I mean, there is none of that. Growth prospects seem better. I mean, underlying growth seems better, and the twin deficits are far lower. As I said, nobody's really making that comparison, but I don't think one should even get anywhere close to that.
And the biggest barometer, Prashant, of a reaction in terms of whether the rupee is a worry or not would be first on the equity markets. And look at where the Nifty is at. We're resilient at 11,400. We have the mid-cap index, which is up 75 odd points, and the big bank Nifty, which is up around half-odd%. So the market was expecting the rupee to go to 70. At the end of the day, yes, it's a headline figure of 70, which is being breached, but nonetheless, the market had expected this kind of gradual depreciation to come through. Sudarshan Sukhani joins in to talk about the technicals of the market then. Sudarshan, hi, over to you then. What are you recommending, stocks as well as index, as well as maybe for the rupee?
Well, good morning again. You've already talked about the rupee. The chances are that we'll go towards 71, and it could be a little volatile, but I would suspect that the rally is likely to continue. And Lata has assured us so many times, even before this rally started, that the depreciation of the rupee is actually beneficial to the economy. So I think the stock markets will not mind it. For the markets itself, there is a mild intraday trade on the long side. You can buy the Nifty Bank, buy the Nifty, expect maybe there will be some gains during the day. But beyond that, do not carry the positions overnight because tomorrow is a holiday. World markets remain choppy. So apart from a very short-term intraday trade for selected people, I would avoid the index altogether. Focus only on individual stocks. Among the stocks, TCS is a buying opportunity. I think the reason why IT is a buy is so obvious. I don't even have to discuss it. The charts are simply reflecting that reason. Hindliver is a buy for the day. FMCG is doing well at least today, and we can ride that trend and get whatever we want. Some of the gains have already come in the morning, but maybe something is left. And finally, Kotak Bank has been an outperformer among the banks. That's a buying opportunity. Apart from TCS, for the other two, keep them intraday. I do not think that we are starting on a new up move again so soon. It's going to be very choppy.
Okay, we've got some questions, Sudarshan, coming your way. So this is Iqbal Ansari who's writing in. He's got 200 shares of PFC. He's paid 126 rupees each for them, holding them since November of 2017. Wants to know whether he should hold or sell. What would you tell him? PFC.
That's PFC. I would tell him to get out. It's a clear underperformer. There's nothing in it. So the best thing now is to get out and switch to some other financials. Why not switch to private sector banks? Yes Bank, IndusInd Bank, even Kotak. Get out of this.
Okay.
Sell.
Sudarshan, I had a quick question on Cadila. You know, secondly running, the stock is extremely weak, down 4%, down 10% week to date at this point in time, and 21% year to date. Fundamentally, there doesn't seem to be much amiss for the company.
Well, technically, I would be very upbeat. So on the charts, not only Cadila, but most top-class pharma companies are buying opportunities. So I would be long there.
Okay. All right, Sudarshan, we're going to let you go on that note. Thanks very much for joining in and talking to us. So those are some technical calls coming in. We have more F&O strategies lined up. We have Gaurav Bissa joining in of LKP Securities to tell us more. Gaurav, over to you, stocks as well as index.
Good morning. As far as the index is concerned, there's a good amount of trading that we are seeing in 11,500 call option, 11,300 put option. So overall, the cues would be coming from technical indicators which are suggesting a small bounce back coming in. If the levels of 11,350, 360 are held, we can see a bounce towards the level of 11,500 again. As far as individual recommendations are concerned, the first recommendation would be buy on C8 futures. Today we have seen about 8 to 9% OI additions building. It's very strong longs that are getting built, giving breakout on short-term charts. If the levels are the current levels are sustained, a 4 to 5% jump in next 2 days cannot be ruled out. One can play with the stop loss of 1410, immediate targets of 1460. Secondly, buy on Amaraja battery futures. About 10% OI addition has seen today. It's been trading in a range coming out of this consolidation, decent breakout. One can play for 865, keep a stop loss of 832. And final recommendation would be on HPCL futures. Consistent short positions are seen getting built. Today also we have seen about 4% short positions getting built in HPCL. Use a small bounce towards the level of 271, 272. Play with stop loss of 276 and immediate target price of 265.
Gaurav, thanks very much. Appreciate you joining in, and we speak again soon. Looking okay, 11,402. I mean, the currency is around that 70. It's pulled back a little bit with news that the RBI is basically in the market, maybe to calm things down a little bit, but it's at about 69.96. We are going to keep and pay close attention to what happens to the dollar rupee. Manisha is joining in to talk about commodity and currency. We've, I guess, talked a fair bit about currencies, so let's spend some time talking about commodities, metals very specifically. Manisha, morning.
Morning, and thank you so much for that, Prashant. Well, absolutely. The metals are getting an impact from what's happening in the currency space, but mostly on what's happening with the US dollar, because that really seems to be the choice of safe haven currency at this point in time. 13-month highs, and 96 seems to be holding on that one. And that is one reason that you have seen pressure come in for many of these metals here. But the other reason clearly has been the kind of data that China has come out with today, the output numbers. So the 10 non-ferrous metals really have seen an output increase of 8.5% month-on-month basis. And this is the highest since December 2017. And that is perhaps yet another thing that is putting some pressure on prices. But on the other side, the positive really continues in case of the steel prices, where we have seen prices gain up by nearly 20% in this year. The demand estimates are on the stronger side. The China output curbs starting in winter is something that really seems to be supporting that space there. But to talk further about that, we are now joined by Paul Bartholomew of S&P Global Platts. Paul, hi, thank you so much for joining us. First of all, what's your sense on the steel prices really? Because this is one area, this is one spot in the metal space which has been very, very positive.
It has, but it's an interesting market at the moment because there's a lot of sort of moving parts. Obviously, we've got all the winter output cuts happening in China, but we've got the weaker Chinese currency. But then the latest thing really is what's going on in Turkey. So with the lira depreciating like crazy, it puts Turkish steel exporters in a potentially stronger position. So now you're finding some Asian steelmakers are sort of nervous that they're going to be competing with, lower priced exports coming out of Turkey.
So how much of an impact of Turkish lira or Turkey concerns do you see really coming in for metals? Because the markets already have been taking impact from the US-China trade war concerns, and with Turkey concerns now into the market, and how, what is your sense on how is this sector really going to tackle that?
Yeah, I mean, it's still like a lot of things. It's still kind of it's all sort of moving very quickly, a bit like the sort of impact of 232 and all the various trade conflict impacts. I think already we've sort of seen some steel makers or steel buyers rather in Asia sort of going into kind of wait and see mode, because they think that if there's going to be a lot of Turkish material coming out, it might sort of pressure other prices in the region. I mean, at the moment in China itself, it's quite an interesting market, because I think the feeling is, even though steel prices are so high, that the fundamentals are not as strong as they may appear. So you've got manufacturing's a little bit soft. Construction's going okay, but what seems to be happening is the Chinese government seems to be putting in a lot of liquidity into the market, particularly with a focus on infrastructure. And I think that's really to sort of support a slightly softening economy over the back half of the year. But I think the feeling is, if it wasn't for these winter production cuts and steel restrictions, then the market could be coming under a bit of pressure.
Paul, would you say that the whole currency play that we are seeing in commodities and the metal sector for that matter is short-lived? Would the markets come back to fundamentals quite soon? How much time would you really give all this?
It's difficult to say, I suppose, because the Turkish situation is still relatively new and it's sort of moving quite fast. I think. I mean, the big factor is if China sort of suddenly lifts exports, which I don't think it's going to do. I think a lot of the focus is going to go back probably on the domestic economy. If, as I mentioned earlier, there's a bit of stimulus sort of going in there. I mean, even in India, you've seen exports dropping off and production sort of lifting. So as long as I think countries are generating enough demand for steel, that should solve a lot of the problem.
Point taken, Paul. Thank you so much for joining us. So as far as the steel prices and demand goes, well, that is still a positive, but it really is about the international cues, and for the very near term, that is where the concern lies.
Okay, all right, Manisha, thanks very much for that. Well, for the markets, we're being very resilient at that 11,400 mark, so haven't really moved from that level at all. And the advanced decline ratio is just about holding at around 1:1, so 1,170 odd stocks advancing. And at a time when Jet Airways is going through turbulence, its pilots union has asked the company to provide details of a turnaround plan for the company. This is in midst of talks of a pay cut for employees. Utkarsh Chaturvedi joins in with more details on this. Utkarsh, over to you.
So, two things to be seen here. One important part is, given the fact that the Jet Airways pilots are asking the management for clarification on the turnaround plan, they're asking the management, what is the way for future. That gives us an indication that the pilots are not, rejecting the whole idea of pay cuts at this point of time, but they're into negotiations with the management. Now, what our sources in the National Aviation Guild, which is the union for Jet Airways pilots, say is that they've went ahead and they've gone to the management and they've asked the management to give them details about what is the turnaround plan. Secondly, the money which will be deducted from the pilot's salary, is this reversible? In how much time will that be recovered? Will they be getting the salary back again? These are the major questions. Also, what they're asking is that where will these funds be utilized? Because when we spoke to the pilot, they said is they want a clear picture of where the funds will be utilized. They do not want the money to be going into promoters' pocket, and that is what exactly what they said. They also said is that we want to see how are the other areas of the company are going into cost cutting, which are the other cost cutting measures, because we need to be sure that if we are giving 25% of our salary, then the company should really turn around. So these are the major questions which are being asked by the Jet Airways pilots. As I said, they have not yet accepted the whole proposal of a pay cut, but given the fact that they're into negotiations, they're not downrightly rejecting the whole plan of pay cuts at this point of time, and they'll have to hear from the Jet Airways management.
Utkarsh, thanks very much. So that's a story we are tracking very, very closely. There are lots of angles to this one, and we promise to keep you on top of the fast emerging news developments with regards to Jet. Well, on to another story now, and this is from the world of NPA resolution. So the Committee of Creditors for Bhushan Power will meet today to decide on revised bids submitted by the three bidders. Remember, one round of bidding has already taken place, and now, just like we saw in the case of Binani, it looks like this is going to be some sort of a bidding war. I mean, we are essentially in round 2 already. The bids have been submitted, and today we'll find out who's bid for the asset, how much. Ritu Singh is joining in with the details. Ritu, morning.
Morning, Prashant. That's right. You know, today's meeting is important because this is widely considered to be the final round of bids, given that the NCLAT and the Supreme Court have both ruled that the lenders can ask for revised bids and had given lenders a clear deadline before which the final bids had to be placed, and that was yesterday. We understand that after resisting the last time around, where Tata Steel challenged the NCLAT decision in Supreme Court, which asked all the three bidders to submit revised bids, finally it is caved in because the Supreme Court rejected that plea. The NCLAT has also made its direction very clear. So all the three players, including Tata Steel, JSW Steel, as well as Liberty Health, placed their final bids for Bhushan Power and Steel with the IRP yesterday. Today, the Committee of Creditors is meeting. In fact, that meeting has just started. The bids will be opened, and we're given to understand that all the three bidders are also part of the meeting today, to discuss what offers are on table. Remember, last time around, JSW had revised its offer from 11,000 crore to 18,000 crores, which was 1,000 crores higher than Tata Steel's 17,000 crores payment to lenders. And Liberty Health, their bid stands at around 18,500. So it remains to be seen which, where the final bids stand. And once lenders take this decision, they'll place it with the NCLAT by the 16th of August, because 17th August is the hearing in this Bhushan Power case.
Okay, all right, Ritu, thanks very much for that. So that's the update coming in. Just want to point out, in terms of the market, a couple of stocks which stand out seem to be Apollo Hospital. Remember, that stock actually saw a huge rally in yesterday's trade. So it was up 14% in yesterday's trade, and today is just about holding up in the green. So crossing its 200-day moving average. Remember, that stock has seen a dismal performance year to date. It's down around 11%, so a bit of a pullback there. And Reliance Communication, that stock has had a good week, actually, or 2 trading sessions. It's up around 8.5% and it had a fabulous month. So it's up 46% on a month-to-date basis. But you can't leave out the fact that it's still down 41% year to date.